want to stick with China, look at it from an investment perspective, what a declining population and slowing economic growth means for investors. And for that, we want to bring in Alejo Czerwonko. He's the Chief Investment Officer of Emerging Markets Americas at UBS Global Wealth Management. Alejo, it's great to see you here. So what does this mean, I guess, from an investor perspective? How should we be looking at these headlines?
Absolutely. Thank you for having me. You made really good points about what's going on in China, starting with the GDP number that came out quite recently. Look, I think this is purely backward-looking data. This does not contemplate the economic impact of the reopening, which is very significant. The same way that China engineered a contraction in a way in 2022, it's engineering a recovery in 2023. And on the back of this information, I think the rally in Chinese equities that we've seen in recent weeks has further room to run. The reopening in China is boosting GDP, but it's also boosting earnings, not only within China, but also globally to some extent. We shouldn't forget that China is the largest importer of commodities among other goods. And China is also a big consumer of tourism. As of 2019, 150 million Chinese folks went out of China for tourism purposes, spending close to $250 billion per year. This is going to be a boost for the economies that are exposed to Chinese tourism. On the other hand, you rightly highlighted secular drags on Chinese growth, population contraction. This is not new. This is something that will without a doubt be a headwind to economic expansion for many years to come. So we got to balance the cyclical with the structural in a way.
In terms of China's goal of becoming the world's #1 economy, how significant is their first population contraction since the early 60s?
I think it is significant because when you look at, what GDP growth is made out of, you're talking about the growth of your human capital, the growth of your physical capital, and the way you combine these two. How productive are you in putting together human capital and physical capital? As you rightly pointed out, the growth outlook for human capital is constrained, right? At least the number of people. You can invest in the quality of education, the quality of healthcare to try to boost this up, but it's not going to be easy. Therefore, you got to rely on physical capital, investments in this area, and of course, productivity. I would argue that China has quite some leeway so as to improve both physical capital and particularly productivity. So the story of convergence and the possibility of China becoming the #1 economy in the world is not completely out of the possibility. Is of course a lot more challenging that we thought just a few years back.
And Alejo, looking within China, what do you like? What are some of the best ways to play it?
Look, I think you should not only contemplate investing in H shares, but also include some A share exposure in portfolios. I'm talking about shares that trade in Hong Kong offshore, as well as in Shanghai and Shenzhen domestically. But the story of the China reopening shouldn't end exclusively within the frontiers of China. As I highlighted earlier, big spend in commodity, big spend in tourism. This should boost economies in Southeast Asia. This should boost economies in Latin America. So I think the opportunities in international markets are going to be fairly attractive as we look into the remainder of 2023.
I want to get your thoughts quickly on one of the biggest situations around the planet, which is the insurrection, riot, whatever you want to call it, in Brazil and their political instability. How does that weigh on the economy and investments?
Look, it's undoubtedly an unfortunate set of events that took place on Sunday, January 8th in Brazil. Of course, a lot of parallels to what had happened in the U.S. on January 6th. Quite a number of differences as well. We need to remember that Brazil already had a new sitting president. We need to remember that a broad range of media stakeholders, political stakeholders spoke very, very much against this event. So I think we're moving past this headlines, and investors are focusing on economic policy making under sitting President Lula da Silva. The news out of Brazil is not great in terms of the proposals for how to manage fiscal accounts, the proposals on how to manage quasi-sovereign firms in the country. At the same time, in our analysis, Brazilian assets are fairly cheap. equities, bonds, to some extent the currency. So you got to be selective. There are some opportunities in Brazil, in a region that is going to be characterized by a fair amount of political risk. But to be frank, where in the world are we not seeing political risk these days?
That is an excellent point. Unfortunately, it may have started here. Alejo Czerwonko, Chief Investment Officer, Emerging Markets Americas at UBS Global Wealth Management. Appreciate it, sir.